You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 15th day of January, 2025. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, when Michael joins us in a little bit, he'll walk you through step by step how to take the trial. We'll get you indicators indicating today. Your trial will officially start tomorrow, but it will carry into next week because you always get 5 consecutive trading days on the trial. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which, unlike the first broadcast, this one is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you will get an email about an hour before the broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of doing it that way is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there's going to be days that you're out of the office, away from the desktop, but still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can literally see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but if you're new, again, it's a great way to see how we've arrived at where we are from whence we came. youtube.com/CFRN. The schedule right here, this is for each and every afternoon broadcast. Start out with our daily devotional, which we'll get to right now. The topic we're on is 7 ways to renew your mind. We're on day 6 of 7. Today's scripture, Philippians 1, verses 3 through 6, and I'm going to share it from the Message translation. Every time you cross my mind, I break out in exclamations of thanks to God. Each exclamation is a trigger to prayer. I find myself praying for you with a glad heart. I'm so pleased that you have continued on in this with us, believing and proclaiming God's message from the day you heard it right up to the present. There has never been the slightest doubt in my mind that the God who started this great work in you would keep at it and bring it to a flourishing finish on the very day Christ Jesus appears. Now, of course, this is Paul writing to the church at Philippi. So the 6th step, this is 7 ways to renew your mind. Here's step number 6. Celebrate the process. It is going to take time to see a change in your mind. I think there is a reason why God took 6 days to create the world instead of 1 day. I believe that He wanted to show us how to go through the process of change. In the account of creation, we see that each day God did something great. He would end the day by celebrating what was done instead of complaining about what was still not done. On the 3rd day, when there was still so much work to be done, God saw that it was good. Similarly, the process of renewing the mind happens when we celebrate small victories and focus on what God is doing instead of what He is not doing. Also, it is worth noting that God never compared the messy process of creation to the beautiful heaven where He resides. The enemy will try to mess up the process of your mind renewal by making you compare your progress with someone else's. We're all on different days of progress. Therefore, it's important that we fix our eyes on the Creator and not compare ourselves with others. Comparison kills contentment. We are encouraged to run the race looking to Jesus, not to another runner, to see how we compare with another's journey. That's Hebrews 12:1. The greatest joy in life is to know who you are and who you are not. To be comfortable in your own skin and happy with the path that God has you on, even if it looks like you are way behind everyone else. Remember, you are complete in God. You do not need to compare yourself to others. Comparing leads to complaining, which can lead to breaking the 10th commandment of coveting. And coveting kills God's creative process of renewing your mind. So if your neighbor's lawn looks greener than yours, then start watering your lawn. Be the best version of you the world has ever seen. Remember, what God started, He is faithful to finish. And remember, He's not done with you yet. Join me in a word of prayer. Heavenly Father, I thank You for the people that You've placed in my life. I remember them every time I am filled with gratitude and joy. I trust that the good work you have begun in them will be carried on to completion until the day of Christ Jesus. Strengthen us all to walk in faith, and may your love and grace abound in all that we do. And Lord, we continue to pray for our family member, Hal. He's going through a lot right now, Lord. We just pray that you give him peace, that your presence would fill his heart, his mind, and all the other members of the family. It's in Jesus' name we believe and pray. And everybody said, amen. All right, let's look at the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices called. Currently, let's refresh this one more time just to be sure. Yep, the Dow's up 625 points, 1.5%. The Nasdaq's up 377. That's almost 2%. S&P 500 is up 89, 1.5%. And the Russell 2000 up 34 points. That's over 1.5%. In the commodity basket, crude oil up $2, trading 79.48 last. That's a gain of 2.5%, or $2,000 per contract traded. Gold up $30.80, trading 27.1350 last. That's a gain of over 1%. And silver up $1.02, trading 31.37 last. That's a gain of over 3.25%, or $5,000 per contract traded. In the Asian markets at the close, the Nikkei fell 29 points. Shanghai dropped 13. The Hang Seng gained 66. And in the European markets at the close, FTSE up 99. That's 1.25%. The DAX up 303. That's 1.5%. And the CAC up 50. So we had a mixed day in Asia. It was a green day for the UK. And it's a big green Radio Wednesday here in the US of A. With that, let's take a look at the news. Hamas and Israel have agreed in principle to a Qatar-mediated ceasefire. If finalized, expected this week, the agreement will mark a step toward ending the 15-month-long war that began after Hamas attacked southwestern Israeli communities, killing roughly 1,200 people and abducting around 250. The current proposal includes a 42-day ceasefire in Gaza and a 3-part plan to release Israeli hostages in exchange for Palestinian prisoners. Under the first phase, Hamas would free 33 hostages, including women, children, and those over 50 years old. Israel would free 30 Palestinian prisoners for each civilian hostage and 50 prisoners for each female soldier. Israel would also increase humanitarian aid and withdraw from populated areas. Negotiations for subsequent phases would continue. It is unclear what will happen after the first 42-day phase. Nearly 100 hostages remain inside of Gaza, with at least a third believed to be dead. The death toll in Gaza is around 46,000, according to the Hamas-run health ministry, which does not distinguish between civilians and militants. The death toll in Israel is around 1,900. Britain's intelligence agency, MI5, released a trove of classified documents yesterday, revealing new insights into the notorious Cambridge 5 Soviet spy ring. The file shows Queen Elizabeth II was not informed for nearly a decade that Anthony Blunt, her long-serving royal art advisor, had confessed to being a Russian spy in 1964 in an effort to avoid adding to her worries. More than 100 documents were released, including partial confessions from other members of the spy ring, such as Kim Philby, one of the most successful double agents in British intelligence history, and John Cairncross, the fifth man, who played a crucial role in passing sensitive information to the Soviets during World War II. Additionally, the documents contained surveillance advice for new MI5 recruits, such as avoiding the use of fake hair, carrying spare change for public transportation, and being prepared with a convincing cover story. Right out of the movies. Call it central casting. Well, we got the CPI numbers today, and the new data from the Bureau of Labor Statistics showed that a key inflation metric eased for the first time since July. On a core basis, which strips out the more volatile costs of food and gas, because we don't really use those, the December Consumer Price Index climbed 0.2% over the prior month, a deceleration from November's 0.3% monthly gain. On an annual basis, prices rose 3.2%. Prior to December's print, core CPI had been stuck at a 3.3% annual gain for the past 4 months. It was the first time since July that year-over-year core CPI saw a deceleration in price growth. Gasoline. Energy prices jumped in December, helping send up overall inflation for the month amid colder than expected temperatures, supply concerns driven by Ukraine's targeting of Russian oil facilities, and optimism over Chinese stimulus spurring demand. According to the CPI data released, seasonally adjusted energy prices rose 2.6% from the previous month, higher than November's 0.2% increase. December's rise in prices accounted for more than 40% of the monthly increase in headline inflation. A big reason for energy's increase was gasoline prices, which popped more than 4% for the month as oil prices rallied in December. As of Wednesday, West Texas Intermediate was up about 12% in the past month, while Brent, the international benchmark price, spiked roughly 10%. The Securities and Exchange Commission waged another legal battle against Tesla CEO and ex-owner Elon Musk, this time accusing the billionaire of defrauding Twitter's shareholders. In a lawsuit filed in a Washington, D.C. federal district court Tuesday, the SEC accused Musk of flouting commission rules designed to protect shareholders during his 2022 takeover bid for the social media company. Musk failed to timely file with the SEC a beneficial ownership report disclosing his acquisition of more than 5% of the outstanding shares of Twitter's common stock in March of 2022 in violation of the federal securities laws. Now, this is what the SEC said in its complaint. Musk says it's all baseless and that he did absolutely nothing wrong. Now, the lawsuit comes in the final days of the Commission's leadership under SEC Chair Gary Gensler, who, like his predecessor, Jay Clayton, had investigated Musk's financial dealings. So, just as Biden is taking his parting shots as he goes out the door, Gary Gensler's doing the same thing over at the SEC. They want to stir up as much trouble and leave Trump with as big a mess as they possibly can. So much for democracy and a peaceful transition of power. From Bloomberg, the Climate Investment Fund's capital markets mechanism just tapped the capital markets for the first time, selling $500 million of bonds after receiving bids for more than 6 times that amount. The issuance marks the first time a multilateral climate fund is turning to the capital markets as cash-strapped developed nations balk at providing the funds needed to cut greenhouse gas emissions, as they should. And last but not least, Jamie Dimon agreed with an analyst's assessment that his base case for stepping down as JP Morgan Chase CEO is a few years from now. Well, just the other day, he said he was stepping down. Now he's going to stick around. The new comments on succession came one day after the nation's largest bank announced a management reshuffling that raised new questions about the race to succeed the 68-year-old Dimon, the longest-serving big bank CEO. You just can't make this stuff up. Well, I suppose you could, but you don't have to. All right, on the home front. Logic 247. It's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's crude, gold, silver, bonds. We're in week 337. Over the last 337 weeks, we've issued over 18,800 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, Valerie did this recap this morning at 6:30 a.m. Eastern, so some things have probably changed since then. At the time she did the recap, we had issued a total of 28 alerts since the markets opened Sunday night at 6 p.m. Eastern. We were still waiting on the outcome of 11. It gave us 17 actionable alerts, of which 1 or 6% would have been stopped out, again based on market structure and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, each logic alert has an entry price, an initial target designed to help you get your goal for the day, additional targets, and then a final trade to target. Yes, you can trade them, but the true purpose of the Logic 247 alerts is to help you to learn how to read a chart. You want to get to the point where you can look at any chart of any market in any time frame, apply our humble set of indicators, and instinctively know what the next high probability move is. The logic alerts, if you use them properly, will help you learn to spot potential resistance, potential support, and find the windows of opportunity in between. So if you're just trading them and not learning from them, well, that's a mistake, which you can correct today. Now, our original alert service, the concierge trade alerts, they're different. The logic alerts can come out anytime around the clock, but the CTAs are published shortly before or after the Globex Open each evening. For the past month or so, I've strived to get them out 5 minutes ahead of the Open, which I did last night, and I put a note in the Telegram discussion group if they're going to come out at 5:55 or if they'll be coming out later. There's been a couple days where life got in the way and I wasn't able to get them out 5 minutes before the Open. But just keep an eye on the discussion group and you'll know what to expect. If you're a member or trial member, you should read this information here and make sure you understand it. If you don't, ask, and we'll answer the question for you. So what this means, when this static report was published last night, 5 minutes before the Globex session opened, all of our members and trial members had all of these targets: the S&P Emini, the Dow, the Russell, crude oil, the NQ, gold, silver, and bonds. So all those targets were published 5 minutes ahead of the Open. Now let's go look at the daily chart, the S&P 500 E-mini futures. We talked yesterday about all the obstacles that price would have to overcome in order to get back to the BBC. That's the green line. It stands for bull-bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. The pullback to the BBC price always reverts to the mean. The pullback holds more often than it doesn't, but eventually it will trade through. This huge leg here resulted in the BBC pullback holding 5 consecutive trading days, and it sent us on to put in the all-time historic high, 61, 78, 75 on December 6th. Since then, price got well below the BBC, and then we had a retracement and the pullback held. Then we caught another leg to the downside, and then we had a retracement and the pullback held. And then we dropped all the way to the 38% fib extension, the fib retracement. And when we hit a fib retracement on a daily chart, we expect a decent bounce. This has been quite a bounce. Now, we look at everything from a technical perspective, but we know based on those news articles I just shared with you that there are fundamental reasons behind this move. But it's interesting how the technicals and the fundamentals tend to work together like a hand in a glove. So now we're up against resistance at the BBC. The big question is, will it hold? Now, we've already been above it a little bit, so we're off the high of the day right now. The daily chart's important for a couple of reasons. Number one, the institutional traders who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. So whether you trade futures or stocks or crypto or Forex or ETFs, I encourage you to spend 2 minutes with the daily chart of whatever it is you're about to trade. I know you're going to trade it on smaller time frames, but get a big picture look. Number one, it not only alerts you to what the deep pockets are doing, but you're able to identify major areas of support and resistance. On your smaller time frame, you would have never known that back on, this is Wednesday, Tuesday, Monday, back on Monday, as price, and this was a huge red candle all the way down. Just looking at your smaller time frame, you would have no idea price was about to hit a major support area, the 38% Fib retracement. Also, this morning as price rallied up, you would not have known that price was about to run into the BBC, which it did, and which right now is acting as good resistance. Remember, the pullback holds more often than not. Held here and held here and held here, but you got to keep in mind that eventually it will trade through. And so if it does trade through, you know that right here you got a 24% Fib extension, and then the next major obstacle overhead would be the 38% Fib extension. And then we've got this little high right here before you get to the 50% Fib extension. Again, get a big picture look at what you're going to trade, and then as you drop to your smaller time frames, you can make a conscious decision whether you want to trade, with the larger trend with the deep pockets, or if you want to swim upstream. All alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. And I say if it's not broke, leave it alone. When price drops to a weekly zone, we expect support. When price rallies up to a zone, we expect resistance. That's under normal market conditions, of which we don't have right now. We got the inauguration coming, everyone's on edge. Will the inauguration go smoothly? Will all these appointments get approved by Congress? They're grilling them real hard. But everyone still seems to be positive that they're going to get confirmed. So, anyway, the vertical lines separate today, Wednesday, from Tuesday. Back here's Monday. These are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern for the last 15 plus years. Once they're published Monday morning, they're carved in stone for the entire week They do not change in any way whatsoever. So this was the opening candle last night, and we dropped to the BBC and to the zone, and we consolidated until about 5:30 this morning. Now, consolidation can look like that, it can look like that, or like that, it can look like that. But when price encounters a weekly trading zone, 70% of the time, that's what you're going to get, consolidation. 20% of the time, rejection. 10% of the time, the slice. That's when price on the 30-minute chart slices through a zone like it's not even there. Now, when that happens, price will typically retrace back to the zone it sliced through, continue in the direction of the slice. But again, we've had some incredibly volatile markets, so we've had a number of slices over the last week or so that did not behave as we suspected. So after all those hours of consolidation, price finally lifted ahead of this news that came out at 8:30 that sent the market substantially higher. And on the way up, you had the perfect stack. Price, step line, blue and climbing, BBC. Just got a leg and a little retracement. Then the news came out, and off we go. Now that was at 8:30. So you got to come over here to see the Wall Street open. Okay. We made it almost to the zone overhead at 59.97/98. The step line crossed, blue and climbing. See, on the way up, they're running parallel. Price, step line, blue and climbing. When the step line crosses blue and climbing, typically price will then retrace back to the BBC. But again, there's some irrational exuberance in the markets right now. Blue and climbing has gotten directly above price. When that happens, blue and climbing can quite often become resistance because it's on its way to becoming red and falling, and that will again most likely take price back to the BBC. On the Dow, here's where we opened last night. Price always reverts to the mean, so here we go to the BBC, and you can see right there where red and falling turned to blue and climbing, and that was time for liftoff. Took us up to and through the target, and then that news came out at 8:30, and that sent us all the way up through that zone. We put in a high here at 43.515. Just like on the ES, the step line is crossed, but price is still attempting to go higher. Under normal conditions, price will retrace. Once that step line crosses, price will retrace to the BBC. Just like on the ES, blue and climbing is now directly above price. So we may see price go up and challenge that. And this very well could be the high of the day. But again, these are not normal markets. There's all kind of geopolitical pressure and political pressure fueling these markets. And of course, everybody's hoping we're going to get another rate cut. At the end of the day, that's really what it comes down to. Will the Fed cut or not? The real question is Jerome going to have a job? Trump says one thing, Jerome says another. Well, I guess we'll see what happens after the inauguration. On the Russell, we opened right at the zone, just consolidated sideways, reached down, touched the BBC, got a leg and a retracement, and then there comes the news. Since then, the step line has crossed, blue and climbing, and price has not made it all the way back to the BBC. It's currently up against resistance at the weekly zone, 2275/76. If price can overcome the zone, and you've got blue and climbing directly above price, and that signals potential resistance. On the NQ, this was the opening candle last night. The same consolidation. It was really quiet overnight. And when the market coils up like that or consolidates for that length of time, as we've seen now on all the markets, it's usually going to explode in one direction or the other. Now, if that news this morning had been a little different, we'd probably be looking at a huge red candle. But the market took it as good news, and off we go. To the target, through the target, all the way to the zone, then some consolidation, and then we put in a high at 21,408. The step line crossed. That sent us back to the zone at 64/65. And price is trying to work its way up. Now, is it a guarantee that if price makes it up to blue and climbing, that it's gonna stop it dead in its tracks and send it south? No. Does it happen more often than not? Yeah, under normal market conditions. So we'll see what happens. Okay, this may well be the high of the day, as on all the other markets we looked at. Remember, everything has to do with this right here. Price. See, you can spike the BBC. Look at that wick. That was a huge green candle. But by the close of the session that day, on January 6th, price was back to the BBC. And then that night when the markets reopened, we went green up to the 38% fib extension, and then the market got slammed hard for 4 days in a row. 5 days till we hit that 38 and got the bounce. On crude, here's where we opened last night, and we dropped to the short target. When the market finds support, it will go look for resistance. Again, when price moves up to a weekly zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. So from support to resistance, back to support. We get above the BBC, red and falling turns to blue and climbing. And as you can see, that 8:30 news did not affect crude the same way it did the other markets. So we got a leg, a retracement, a leg, a retracement, right back to blue and climbing. Now we're just consolidating sideways. 79.80 is right overhead. Then the highest zone for the week is up at 85.80. So we still have the rest of today and 2 more trading days. On gold, we opened right at a weekly zone. Resistance. That sent us down to support at the BBC. Took us up to the zone. This time we overcame the zone, which is 2694/95. And that took us right up to the long target. We got through the target, then we got a retracement, then another leg, and then a retracement. The pullback held even though it came down. And remember, when price trades through a long target, on the pullback, that target will often become support. Same is true of a short target, but everything's heading higher today. So we'll see how that looks come tomorrow. And right now we're consolidating at the weekly zone, 2715/16. And again, all the zones were published Monday morning at 6:15 a.m. Eastern. Silver. Huge day for silver. We opened right here last night and we traded lower. We got to this area right here. That bounced us up to the BBC. That pullback held. And then we got basically a double bottom right here. That got us back above the BBC. Red and falling turned to blue and climbing. And off we go up to the target, end of the zone, where we consolidate. Then we get a leg and a retracement back to the BBC. Once again, the pullback held. So we got a huge leg. Now that 8:30 news did move silver. We got a leg and we got a retracement. And then we got a leg. And the next zone overhead is 3182. And there's two more zones left after that overhead. Now again, this is Wednesday, Tuesday, Monday. Way back here is Friday. Okay. So from where we sit right now on silver, this high right here, 3167. That should be good resistance. And then we've got the zone. Now, these weren't the zones on Friday. Okay. But you always have to look left to determine where you may potentially find support, resistance. And people always say, well, how far do I have to look? You gotta look as far as it takes. Now we've overcome that resistance. Then we've got potential resistance. We've overcome that, but we're backpedaling. So we'll see if we continue higher. Now, the step line in blue and climbing. The step line hasn't hooked right yet, but it's running real close to blue and climbing. So it's possible we've seen the high of the day on silver. That's about a $5,000 per contract move. So I don't know if we can expect too much more out of it today. If we can get it, we welcome it. Just watch that 3167 number if we continue to move higher. And that takes us through all the markets. Now, over the course of just 3 days, we've gone from support at 38% fib retracement. Yesterday, we ended up with a doji on the day. I talked about resistance times 3 right there. It would be interesting to see if price could overcome it. didn't overcome it yesterday. In fact, it sent the market south. But today, with that cooler than expected inflation print, the market has made a sprint to the upside. The question is now, will the pullback hold, or will price continue higher? If the pullback holds, then we should anticipate a leg to the downside. We could busy up the chart, I suppose. Not real crazy about that, but from this high here to this high here, this area right in here could provide some potential resistance. So Michael should be showing up here any second. He'll give us a recap of everything that happened this morning in the live training room, and then we'll do some live trading on the TradingView platform, and I'll come back and wrap things up with our good word for the day. To become a member, send an email to support@cfrn.net. In the subject line of your email, put "I want to become a member." In the body of the email, just put your name, your phone number. We're not going to call you, but we will send you an email that explains everything it means to be a passport holder and all the things you have access to. And there's a link you can click to officially become a passport holder. You'll get 2 hours of live training every trading day in an interactive environment. This is real trades in real time, real money, and you're encouraged to ask every question that pops into your head, because it's a mechanical trading methodology. A couple weeks you're going to run out of questions, or you'll find yourself asking a question that you've already asked, and you'll be surprised the first time when you get the exact same answer you got the time before. We trade every market exactly the same indicators, same everything. So along with those 2 hours of live training every trading day, you also get private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same, from support to resistance, back to support, back to resistance, over and over, again and again. You get the Logic 247 alerts around the clock, the concierge trade alerts every evening, the second they're published. On Monday mornings, you get the weekly trading zones for the week, and you're able to attend the members only workshop every Thursday night. Everything a trader needs, all under one roof at one low price. All right, Michael, if you're ready, you can take it away.
All right, here we go. There, you should be looking at my chart right now.
Yep.
Okay, good.
Looks good.
All right, so today is Wednesday, right? Yes. Good afternoon, everyone. Today is Wednesday, the 15th day of January 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on this purple button right here. When you click on that, we'll bring you to the registration page. Now, there's no credit card required. You will notice on this registration page, right? You don't see anything on here for registration. All that we ask for is your name, your email, your phone number down here at the bottom. If you have NinjaTrader, give us your machine ID if you want to use Ninja charts. Now, Ninja charts do not have all the features that TradingView charts have, all the indicators anyway that TradingView charts have. Probably all the features either, but if you want NinjaTrader, if you want to give us your machine ID for NinjaTrader, then you can, all right, and we'll supply you with the indicators that we have on NinjaTrader. TradingView is what you really want to get though. Get your TradingView login ID. Okay, if you don't have one to submit to us, you can get one simply by going here. Well, you can go here to trading platforms and scroll down to right here. You can watch this video if you want to, but really you just need to click on this link right here. Click on that link. It says TradingView right up above it. It's going to bring you to this page. On this page, go to non-professional, monthly, and the essential will get you what you need. I'll get you two charts. I'm going to get 2 charts with that, and you get 20 price alerts, 20 technical alerts. You get the custom range bars, which is the biggest thing, the custom range bars right there. That's all you need. You need to also get real-time data, okay? You need to get yourself some real-time data from TradingView. It costs $7 a month, all right? If you're going to trade futures, you need to get real-time data. You can try to hook up to whoever your broker is. You know, some of them will do a free hookup, and that's fine if you want to do that. You know, if your broker happens to be down here, some of them will do a free hookup, but some of them charge a fee to get hooked up. I know mine charged a fee last time I checked. The last time they charged a fee that cost more than the data for real time. So, but I think TradeStation lets you hook up free if you have a TradeStation account. I'm pretty sure they let you hook up free. But whatever, you got to get real time data. All right, if you don't have real time data, you're not going to get real time results. Hey, I should make a commercial about that. All right, the spreadsheet. If you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. All right, we made a new milestone today, our best day yet. All right, did I say that all about the stuff at the bottom, right? Okay, on the NQ we're up 437 ticks. On the Russell we're up 26. On the gold we're up 7, and on the ES we're up 58. Okay. Today it took 1 minute and 1 trade to get to the goal for the day. At that point, we're up $1,500, and it took a total of 45 trades today. 45 trades. That's a lot of trades. Is that the most we've taken? No, we took 46 once last month. Okay, so 46 is the number of trades to beat, and $3,110 per contract is the number to beat. Anyway, on the month, we're halfway through the month now, and we're at $17,360. 9 days into the month, we're averaging $1,928 per contract per 2-hour business day. That number keeps getting bigger. That's crazy. Anyway, 9 out of 9 days so far this year, we've gotten the goal, and we've gone 24 days now since our last non-green day. Now, a non-green day means we did not get the goal for the day, and, well, we ended positive, but we did not get the goal for the day, right? It was a yellow day back there. $10. $10. Today, when we were about an hour away from the end of the session, we're halfway through the morning session. I said, hey, I need to make another $1,000 a contract to get better than that. I was at like $1,700 or $1,600 or something like that. And I said, I need to make another $1,000 a contract. So those 75 tick wins on the ES, they add up quick. Anyway, so on the month now, we're at $17,360 over 9 business days, averaging $1,928 per contract per 2-hour business day. And we're at the same place on the year. The 24/20 blueprint, right now, we've traded 39 minutes, and we are at $45 a minute, basically is what we've come down to in our trading so far. We're at $1,765 for 39 minutes. Now, on an hourly basis, that works out to about $3,500, $3,530 or something like that. Right around there somewhere, $3,500. But that's where we stand so far in the 24/20 blueprint. Okay, now there are a lot of trades to get through, so let's get into it. We'll start out here with the gold. I missed most of the trades on gold, as you can see in here. I'll go back to the beginning. Our first trade on gold was right here. We picked up 10 ticks on that. All right, I missed a really nice trade there. I missed a really nice trade there. I was describing something there. Missed a really nice trade there. Then, well, no, I got this trade right here. We went from 10 to 22, so we got 12 ticks there. And then we stopped out minus 10, but back down to 12. Then we had a +2 there. I missed a really nice trade there. +2 there to get us to 14. Missed a trade, 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 missed a trade. Every one of those trades was a winning trade. I got 1 tick on this to get me to 15. I got 7 ticks on that to get me to 22. And then I stopped out on that to get me back down to 7. Okay. That was what I did on gold this morning. There were a bunch of trades there that I missed that were good, nice, valid trades that were winning trades. There's some that I missed that I didn't mark. There was one right here that I didn't mark. That was a winning trade. Been right there. One right here that I didn't mark. That was a winning trade. Would have been right there. One right here. Now it would have been the entry of this bar, but it pulled back pretty deep, but it didn't pull back 15 ticks, so that would have also been a winning trade. This right here would have been a winning trade on that bar right there. And I guess that was, I'm sorry, that wasn't during the morning session. Well, okay, during the break, there was another winning trade there, another winning trade there, another winning trade there, another winning trade right there was the last one. Okay, and that was gold. So it was just trade after trade after trade on the gold. I ended up on the gold, I ended up +7 ticks. I stopped out twice on gold. And some of those trades, I got very small wins. The Russell. Finally, we ended up positive on the Russell. Now, the Russell had a decent day today. We missed the first trade right here. That would have been a deep pullback, but a win. We missed the second trade right here. That would have been an immediate win. We missed the third trade right here. That went into profit enough to get the stop to break even before it pulled back. We missed the fourth trade right here. Did the same thing, went in profit enough to take profit or get the stop to break even before it pulled back. Then right here, we missed that. Oh, we got that trade, sorry. On the Russell, we went from 10 to 15 on that one, so we picked up 5 ticks on that one. Or is that our first? That was our first trade. We picked up 10 ticks on that one. And we had a break even there. We had 5 more ticks here to get us to 26, and then missed a trade right there, missed a trade there, and we got 11 ticks on this one to get us to, sorry, we got 5 ticks to get us to 15, and then 11 ticks here to get us to 26. During the break, there was a trade right here during the break. There was this one, and then it was one right after right here during the break that I missed. That might have gotten you to break even. It might have stopped you out. There was one right here that I missed. That would have been a nice winning trade right there. There was one right here that I missed. That would have been a stop out for sure right there. And one right here. You would have gotten it right back. And one right here. Now, this one, you would have entered at the open right here. I had to go 10 ticks into profit. You would have shorted at the open right there. Okay, it's 71.1 and it dropped down to 70.4, so that would have been a stop out. I'll mark that one for you. That would have been a stop out, and that was it. So the Russell, as rough as it's been the last few days, we managed to get positive on the Russell, to stay positive on the Russell. Now the ES, we killed it with the ES at the beginning. We were up 60 ticks at one point on the ES. We ended up plus 58, but we were up 68, and then we had a few losers in there, as you can see. Our first trade on the day right here on the ES, where is it? Right there. We picked up 12 ticks. That's where we got the goal today. We're up $150 a contract on that trade right there. Picked up 12 ticks on the ES. Then it looks like this was a long period of time right here. It was only about, well, I guess it was about 20 minutes. I didn't trade the S again, and there were a bunch of trades to take, but I didn't get any of them. There was one here. That was a nice win. One here. That was a nice win. One right here. That would have been a stop out. One right here. That would have been a stop out. One here. That you would have sold the open of this bar right here. That would have been a win. Then I finally got into the trades here. I took another trade right here, and I got 4 ticks on profit on that to get us to 16. And I missed a trade there. I missed a trade there, and I grabbed this one. Now this one went from 16 to 44. So that's not quite 30. That's 28 ticks right there. Yeah, 16 to 40. Is it 20? No, it's 18 ticks. What is it? 16 plus 10 is 26 plus 20 is 36. Okay, yeah, it was 28 ticks. 28 ticks. To get us up to 44. Then we had a stop out Hang on, we went from 44 to 47, and then we had to stop out and went back down to 37. So that was a stop out that sent us to 37. Then went from 37 to 46. So we had a 9-tick win. Then went from 46 to 58. Then went from 58 to 66. Then we started in 66, 68, a small win, then a stop out, back down to 58, then another stop out, down to 48, then a break even. Then a +1 to get us to 49, then another +1 to get us to 50, then another +1 to get us to, it was a +6, sorry, to get us to 56, then a break even, another break even, then another +1 to get us to 57, then a whole bunch of break evens, and then another +1 to get us to 58, and another break even. And I believe that's where we ended it for the morning session. So we had all those break evens at the end. 1, 2, 3, 4, 5, 6 break evens at the end with 1 +1 right there. It was triggering a ton of trades. There was this trade right here that happened at the end of the session. I didn't get. And let's see, the next one that I had was right here. That would have been a stop out, followed by a win right there, followed by, that would have been a long trade from right here. That would have eventually gotten you some profit, followed by a nice gain right there on that one. You would have shorted the open of this bar right here that eventually, before it pulled back 10 ticks, it eventually went down to here. That would have been a long trade, it seems like. It's only been a few minutes, but it seems like a lot of bars in there. You had a long trade right there that worked out, a short trade right here that worked out, a short trade right here that would have been enough to get break even. A long trade right here that did not work out at all, a short trade right here that worked. A short trade right here that worked, and a long trade right in here. That's where it stands right now. Okay, so on the ES, we traded a bunch of times. The ES, we traded 23 times, I think, on the ES by itself. We had a ton of trades in there. A lot of break-even ones at the end. In the beginning, there were a lot of decent trades there. So it was a good trading day on the ES. Now the NQ, we started out really slow on the NQ, I felt like. My first trade on the NQ was 20. Then we followed up with a 75-tick trade. So we're at 95 at that point, but then we didn't trade again for a little while. The next one we jumped on was right here. We picked up another 75 ticks. That got us to 170. Then we went from 170 to 190. Then 190 to 222. Then 222 to 226. And 226 to 250. Then 250 to 290. Then we had a break even. Then went from 290 to 365. Then from 365 to 385. And from 385 to 437 right there. Okay, and that was our final trade on the NQ. There were a couple of trades here right at the end. This one right here, which pulled back, I think it actually ended up going. That might have been a stop out right there. It would have had to pull back 15 points, 42, and it pulled back down to 27. 27.25, so it was almost exactly 15 points. And then right here, there was another short right there that worked out. Would have given you the whole 75 ticks. During the break, let's see, there was a short right here on this one right here that eventually gave up some pretty good profit, enough to get the stop to break even at the very minimum. A long right here from the open of this bar would have given you 75. A long right here from the open of that bar would have given you 75, and a short right here that would have given you about 50. It didn't pull back 60, so you could still be in it. And that was it. Now we ended up with over 400 ticks on the NQ today. That's a first also. I don't think we've ever had anything over 400 ticks. 437 ticks. I don't think we've ever been that high on the NQ. That's with one contract. But going to this 50 range bar using a 75 tick target, that is, well, it's huge, really. It's a big thing. Jill, I'm seeing your pictures. I want to show you something. I want to show all of you guys something. Those of you guys that are watching right now. Those of you who are watching right now. In the old school playbook here, we have this thing in the price panel. That YBR right there. Okay, some of you may remember it, some of you may not. But I want to throw something out here for you to consider. Okay, now again, this is going, it's for people who are having trouble. Right? If you're doing great, then you don't need a thing. But if you're having trouble, oops, the range trigger is what I want, not the slingshot. When you're above the YBR and it comes out of the oversold. When you're above the YBR and it comes out of the oversold. It's usually going to work out pretty well for you. Right? How simple is that? When you're below the YBR and it comes out of the overbought, it's usually going to work out pretty well for you. Okay, for those of you guys who are having trouble keeping up with what's going on, not being able to do the entries where I'm doing the entries, take a little gander at that, okay? I know, the way that I trade is the way that I trade. Not everybody can trade like me, like the short right now on the NQ. How many of you guys were able to put that short on? And were you able to put the short on here? It went way up here before it came back down here. You should have been able to put that trade on. Everybody should have been able to do that. But I know there's some of you people that would say, no, I wasn't able to do that. I missed it. It happened too fast or something like that. If you're used to putting it on when you get the bar close, not at the open, but being proactive and using the proactive approach that we've been doing for so long, what I just showed you right there is gold. And that's just using one of the old school things. You can use from that price panel. Let me put the price panel back on. And within the price panel, there's other stuff that we used to have in here. There's a really old school thing I don't think anybody has anymore. Let me see if it's still on the price panel. Let me see. No, it's not in there. The sentiment indicator. I guess I didn't carry that over to TradingView. But yeah, that's it. We'll just go with that. That's enough. I just say that because you're texting me on my phone over there, and I know that some people didn't have their best day today. I mean, let me show you something else. Let me send you something. I'm gonna put it out here for you guys. Hang on, let me send it to myself first. Okay, and hold it. Here it is in photos. And let me forward this in Telegram to me. There's Telegram. Touch ID. And send to me. Send. Okay. Okay, now, please understand I'm not doing this to make you feel bad. I'm doing this to let you know that it's not just me. This was sent today. One contract, $1,000. Okay, that was sent today. So it's not just me. If you're not getting it, then we probably need to look at what you're doing. Okay, because really it's never been this easy. It's never been this good. I'm having all kinds of things that I've never done 400 ticks in a day on the NQ. I don't think I've ever done over $3,000 per day with one contract in the room. At this point in the month, I don't think we've ever been up $17,000. None of that's an accident. Okay, hang on. Go back to look at the image you just posted. The one that I just did, the trade that I'm in right now. Yeah, that one's not working out so well right now. I am in it. I was playing divergence. Why was that not a trade? Plenty of divergence. I'm not looking at the ES. Oh my gosh. That is a trade right there on the ES. I took that on the NQ. Oh my goodness, I thought I was looking at the NQ. And I took that on the NQ because I'm about to stop out on the NQ. Okay, so I would have just stopped out on that one too. Jill, I would have just stopped out on that one with you too. Sorry. I actually took it on the NQ. I didn't even look. I just went over there and I dropped my order right there in the red because it was there. And yeah, so I took that on the NQ. And right now I'm actually losing on the NQ. I'm about to get smashed on the NQ. Right. Well, the NQ trade should have been from over here. And what number is that at? 40.75, and I'm in at 52. So I'm actually in really good on that 40.75 entry, but I'm about to stop out on it. But this one here would have been a stop out, yeah. Definitely, if I'd have taken that, that would have been a stop out. I thought I was looking at the NQ there. Totally thought I was looking at the NQ. And this isn't one of those times that I make a mistake and it goes in my favor. It hasn't yet anyway. I'm still in it because that was a valid NQ trade from back here that never went into profit. So it's still a valid trade. The ES trade, though, that was a valid trade right there on the ES. Now, let's go back and look at one thing here. What I just said a minute ago about the price panel. All right, on the ES, first of all, you'd be taking long trades, not short trades in here. You'd be looking for it to come out of the oversold, not out of the overbought. I know this doesn't help you very much right now because you just stopped out on that one. It would have stopped out on this one too if you'd have taken it right here too. But what is wrong with me? I totally thought that was the NQ. And I just stopped out on that NQ trade. Minus 60 ticks on the NQ with 10 contracts. That's a big mistake. It's like 10% of my gains. Anyway, not thinking about it in those terms. I made a mistake. Here on the gold right now, we're almost in the overbought. We're getting up close on this bar. That will be a short right there. Okay. And that was a valid trade that you just stopped out on, that I would have stopped out on too if I had taken it. I stopped out on the NQ one instead. The NQ one was also a valid trade, so I don't feel that bad about stopping out on the NQ. It was also a valid trade that I missed, but it was just a total mistake on me. It was a valid stop out on the NQ. That was just a logical error on my part. That was huge. And I've done that in the past, but not have to stare at the chart for 5 minutes. Maybe I need a break. Anyway, it is 120. We don't have anything right now that's suggesting we're going to have another trade. So let's take this off of here and we'll put it over here. Okay, what I was just showing you a minute ago. If you want to keep trading with the trend and you want to use what we have in here, stuff that we have in here. Okay, here's something that you can do. Because everybody has access. Oh, not everybody has access to the price panel. I mean, not everybody needed it. But here's the price panel. Okay, let's look at it on the NQ. And let's get rid of the slingshot. We'll just go with the trigger. If it comes out of the overbought, you're above the YBR. Comes out of the overbought and you're above the YBR. Comes out of the overbought, you're above the YBR. Comes out of the overbought and you're above the YBR. There's one out of 5 trades right there didn't work. Okay. Over here, you're below the YBR and you come out of the oversold, the overbought, I mean, right there. So your stop on that would be up here. So that one ended up working out. Same thing with this one. This one. The stop on that would be up here. So these ended up being combined into one trade and they all ended up being, now if you sold when it came out of it, you're selling down here at the bottom now, remember, you're not selling at the top. So your stop's gonna be up here, just a little bit above the bar. This ended up would have been a stop out, but it would have contained all of those. And so you would have had 3 decent trades, 1 stop out over here, 4 decent trades with 1 stop out. And that's all in the last hour. This is on a 50 range. You need one of those to be good. One of those to be good. Right? Or 2 out of 3 to be good. You know, if you get a stop out, then the other 2 will make up for it and get your goal for the day and then some. Just one of these trades right here. Bang. Right there on the up close. Right here on the up close. Right here on the up close. Right here on the up close. Now, the up close on this is right here. Okay. 59.75, let's just say 60, and it ran from 60 up to 71. That's 44 ticks right there. If you're not taking profit on 44 ticks, which is more than twice the goal for the day, then, you know, I just want to show you an alternative. If you're having trouble doing it the way that I'm doing it, you know, just trading the divergence and getting in the trades, because I've gotten that feedback that people are having trouble getting in the trades at the right time. I mean, a lot of people are not having any trouble at all with this, and they're making a lot of money, more than they've ever made. But there are some people who are having trouble getting in at the right time. And if that's the case, because your mind is so set to the way that we've been doing it for over a decade, then you can still do it that way. Okay? There's nothing wrong with doing it that way. It's just, you know, you're not going to have as many trades. If you're just quitting when you get the goal for the day, that still works. I mean, that worked for us for over a decade. So you can keep doing that. All right. Anything new that I ever show you, if you're already successful, if you're already getting your goal for the day, then, you know, just tune me out. You don't need to hear anything new. Okay, it's a new shiny thing. And, you know, sometimes the new shiny thing can turn out to be more complicated for people. And I never mean it to be. I always try to make things easier. I mean, we've gone from all those colors and arrows, all those different color arrows and all those colors and all the different bands and all that stuff, having nothing at all on price. I think that's simplification. And if you wanted to go back to having something on price, I just showed you one thing you can put on price that will make a difference and reduce things down here. So it's kind of a wash in things you have to look at. Now, the big question is, do you have the price panel? Because it's inside the price panel. That is something that everybody, even mentoring, has access to. I may not have given it to you, but that's because the majority of the people, if you sign up right now, you pretty much just get the context and the ultimate slingshot and the range trigger right now. And I don't think I left the YBR inside the context. I'm pretty sure I took it out of the context. There was enough in there that I need a YBR in there too. Yeah, I don't have the YBR in there. Yes, that is frustrating. I get it. But you know, we should really talk, because I think some of that is in your head. I think you put a lot of pressure on yourself. So we should have a meeting. I know you want to have one anyway, so we should have a meeting and get through all that. Okay, so right now on gold, we need a down close to get that into the oversold. Okay, and over here on the ES, we need a down close to get that into the oversold. And we have nothing on the NQ and nothing on the Russell. You see all these other ones made some big gains today? The crypto, I don't know what happened with crypto, but the crypto's on fire today. Bitcoin is way up. It's back up just at 100 grand.
Question in YouTube. Are you entering on stop limit orders?
I am entering on limit orders, not stop limit orders. They're limit orders. Okay, stop limit order is something you place ahead of time. I'm waiting until it actually closes, and then I'm entering on limit orders. Let me explain that to you. See, we have an all-time high, not an all-time high, but XRP went up over $3 today. Those of you guys can win XRP. Now what I'm doing is this. Right? If we had a trade, I would do it for you. The ES is almost in a trade. So right now, if we get a down close on this bar and it gets down here into the oversold, right? Now, what I can do ahead of time, because these are range bars, what I know ahead of time is at the top of the bars here at 82. So when it gives a down close, it's going to be somewhere down here around 80, right? The open of the next bar is going to be somewhere around 80. Now, what I want to do is get an entry at or below the open of the next bar. Okay. So because these are range bars, I know it's going to be right around here somewhere. So what I do is I wait until the bar closes, and then I see where the open is, and I see where price is, and then I just drop an order right here in the green. All right, I left click in the green. When I left click in the green, it puts a limit order at the current bid. Okay, puts a limit order at the current bid. That's what it does. So it's a limit order. It's not a buy stop limit or a sell stop limit. A buy stop limit is when you put it on ahead of time like that, saying if it goes up to there, I'm going to jump in there. I want to enter there. It's not that. It's a limit order. I drop a limit order here, and it automatically goes at the current bid. Okay, rather than try to race around and try to figure out exactly where I put it right here at the current bid, because the current bid's always jumping back and forth. You just drop it up here. And you can just drop it up here, and it'll fill down here. Okay, if I do this with one contract, let me do it with just one contract. Now watch, I'm going to drop my order here because we're in a position here where it should go down, right? We're in the overbought. I mean, both the blue and the black are in the overbought, but it should go down from here, right? So it's more likely to go down than it is to go up right now. So I just dropped this right here to see it'll fill up here. See that? It filled right up there. You see? That was a limit order that filled up there. Now I'm going to get out of this because I was just doing that to show you. So I just spent $37.50 to show you how that worked. But that's what I'm doing, okay? Whoever asked that in YouTube. If you drop the order right here, the way I have it set up, it becomes a limit order here at the current ask in this case. If I drop it up here, it becomes a limit order at the current bid. Okay. What we were doing before, when we're looking for the up close or the down close to give us the trade, we're putting the buy stop or sell stop limit order one tick beyond where the bar was going to close. All right, you wouldn't do buy stop or sell stop anymore. It would be an actual limit order one tick beyond where the bar is going to close if you want to try to get the open. But the assumption here is that the open is going to be where the bar closes, and that's not always the case. As a matter of fact, it's seldom the case. There's a lot of times you can get a much better entry than doing that. Okay, and that alleviates you from having to keep track of where that is going to be. You know, you just have to know. You know, the bar is going to open right about here. Just be ready for it when it opens. See if you can get a good position. If you can, take it. If you can't, just wait. There's going to be another trade. And the next trade could be better than the trade that you just missed. Okay. All right. It is 1:30 and I got a bunch of things I got to do today. So is the person on YouTube, are you okay with that? I don't have YouTube open right now, so somebody's going to have to relay that for me.
He said yes, thank you very much.
Okay, good. All right, that is it, guys. With that, we are going to wrap it up for now. If you have not taken a free trial with us, then go here to mytradingiq.com. Right here. Sign up for your free 5-day training. No credit cards required for the trial. Just sign up for your free 5-day training right there. It's going to be in the registration page. Just fill this out. Once you do that, we'll get your indicators indicating and get you into the room in the morning with us every single day. Okay? All right. Sorry, we have a healthcare person coming to the house, I imagine. And that is going to be it, guys. With that, I'm going to wrap it up, and I'll pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Wait, if you are ready.
Yep. Recap of the morning session.
Today it took 1 minute and one trade to get to $1,500 with 10 contracts.
Good job.
Thank you. Thank you very much.
All right, guys, we've made it through all the markets. Let's take one last peek at the daily chart of the ES. Okay. We're poking up through the VVC as we did here on this day and as we did here on this day. So where we close today, that's going to be important. Okay. We had some good news this morning. Pushed the markets higher. Traders think that just maybe we'll get a rate cut next year based on the news this morning. So we'll see. Let's see where we close today. Let's see if traders are or have enough conviction to carry it overnight. Institutional traders. See, on this day, we had a green candle all the way up to there. But by the time the market closed that day, we were back to the VVC. And then when the market opened that evening, we attempted higher, got to the 38% fib extension, and then the bottom fell out day after day until we hit the 38% fib retracement, which has now bounced us all the way back to the VVC. So whether the pullback holds or not, remember, the pullback holds more often than not. Okay? Again and again and again. But eventually, it will trade through. And then it'll go back to its normal rhythm. Price always reverts to the mean. In our case, the mean is green. It's called the BVC. Just simply stands for bull, bear, cross. Once again, to become a member, send an email to support@cfrn.net. In the subject line, just put "I want to become a member." In the body of the email, put your name, your phone number. We're not going to call you. We don't have time. But we will send you an email that explains everything you need to know about becoming a passport holder and a link you can click to make it official. So, we covered all of this already. Let's wrap it up with our good word for the day. Talk about relationships. Throughout our life, we're always going to have relationship problems. And I don't just mean in your marriage, but we have all kinds of relationships. At work, at play, even at church. Proverbs 24:16. For a righteous person falls 7 times and rises again. When it comes to handling relationships, we all have our pluses and minuses, our strengths and weaknesses. So to survive and flourish in a relationship, we must learn to persevere. Even when we have done the best we can to lessen our potential for failure, we must still be ready for it. If we stay mired in self-defeat, guilt, and shame over missed chances and incorrect choices in one particular relationship, we will never encounter the freedom to sustain our other relationships. Some good advice is to allow yourself a 10% ratio for failure in a relationship to work out the way you thought it would. So with that in mind, promise yourself that no matter what circumstances occur or which relationships fail miserably, you will survive. You will arise, learn from them, draw closer to God, and if nothing else, thank Him for the blessings that still remain in your life. And when you consider your blessings, You'll notice many. When you think about the long list of gifts that remain in your life, even in the middle of difficulties, losses, and frustrations, you're better able to see the big picture and not just the current trouble in front of your eyes. Gratitude is a sure remedy for self-pity and despair. Thanksgiving lifts you back to a position of seeing your relationships and life more clearly. An important question to ask yourself is whether you really want the relationship to work. If so, commit to praying for the other person, loving them unconditionally, and investing in them. When you do that, you can trust God to do the rest. That's a good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.